Good morning, everybody. It is midweek, Wednesday. It is November the 5th. I guess it's, 1 year since Trump won the election. So we've got that as a benchmark. But unfortunately, we got to take Oracle down. It's time to take Oracle down. On October 13th, we did the Oracle replay, the November 21 Oracle 290 puts. We had originally done the Oracle, the same ones, the November 21 Oracle 290 puts back in September. If you recall, September 15th was when the original trade went out, and immediately, boom, you got your drop right back down as I had done this chart on the live stream prior to the FOMC meeting. First time I had looked at it in years. So you got your dip, and obviously your refresh back up to 320, which greatest thing you could ever ask for, and your redrop down there into that 273, 271 area. So here, back on October 13th, was where I issued out the replay. And, you had this, you had that, 1320, it's where they're trading, it's where I grabbed in, blah, blah, blah. Well, unfortunately, you have filled your gap. Your gap to 241.54 filled last night, right after the market closed. So the gap is completely filled. A move from 345.72 with all the TikTok rumors and thoughts and hopes and dreams to filling your gap down here at 241, which unfortunately means that, 240%, it's time to take your 240% on your November 21 Oracle 290 puts and put them to bed because you're pretty much done. So anyway, so getting back onto where we're at, because people have been wondering and questioning, why is it that we can't sell off? Well, I'll show you in a second, but you've got 6 consecutive closes below the open. 6 consecutive closes below the open after having ventured that one day of being plus 20% year over year. Red for the month. Red, 2 days in a row. Red. Well, unfortunately, your full moon is today, November 5. So one must take this into consideration. It is your full moon. At the same time, because you have these red closes below the open, closing red 2 days in a row, well, not 2 days in a row, but having closed down yesterday with your minus 1% day, having been recorded yesterday, you're oversold. You're oversold at the same time. So, again, take it with a grain of salt. And this is actually why I've shared with you 2 bullish put credit spread trades in today's view room over there on the spreads. And one of the things that you are going to be considering is later this morning, if I recall, if I can see here, at 10 a.m. The United States Supreme Court is going to be having their tariff hearing. This is where, Donald Trump said everything rides or dies on this. Everything rides or dies on this tariff meeting. So that'll be out today, and unfortunately, as much as it wants to be unfortunate with seasonality of November being a bullish month, as of right now, I would be very cautious about being short to the downside. So over on to our QQQ, huge day yesterday, huge day, minus 12.83, down 2%, which, no big deal, but down 2%. Big gap down, which is a big gap that needs to be filled. And you've got your earnings, which came out last night, AMD, which did absolutely Nothing. Hang on 1 second. So your AMD did absolutely nothing. And here we have today, we have McDonald's, which will be interesting to take a look at. Robinhood after the market closed, together with Martin Shkreli's IONQ. Nothing tomorrow and nothing on Friday. Oh, Wendy's, which, you know what, Wendy's, not too bad of a thing, but yeah, Wendy's. So that's where we're at with IWM as well, still hanging in the 240s. Still hanging in the 240s. So be careful about being bearish and looking for a whole bunch of downside to be coming in, because you're pretty much right there. Your 20-day moving average will be moving fractionally up to the upside. We're right at this, not threshold, but you've got your gaps up above. You've got two gaps that are unfilled up above. You have your 1, 2, 3, 4 with your 4 over here for that final fifth. You're right at your threshold, coming right here at the 3 top, right around 67, 64. So basically, you don't want to be breaking down below 67, 65. You hold above 67, 65, you have a chance, a possibility, a one last beer before we hit the road kind of view, where you're sitting right here and you can get that one little bounce move up into the 6900s. People want to say 7100, but I just don't see it happening. But yeah, you are on the edge of your catastrophic sell-off alarm. Same like we've had all year since we started this bounce middle of April. Minus 2.22% so far, minus 3.16, 3.33, 3.37 have been your epic sell-off warning levels. So we're not far from it. Come over onto the ES with your wide view, and your wide view is a little bit too wide for now. So over here on the QQQ, that gap has been filled. This gap has now been... I'll mess around with these in a little bit. This is our gap to be moved to the downside. And this needs to be moved up, but you know what? I don't need to be wasting your time with this. You guys can do it on your own. And this is our gap, which is filled to the downside over here. So we've still got gaps to the downside over on the QQQ, but I would hold my breath before I start thinking that we're going to be getting a major sell-off, because once again, we are extremely oversold. Come over onto the VIX. Why hasn't the VIX gone to 2102? And that's because the VIX hasn't gone to 2102 because it has been a very controlled movement up here into the 200-day moving average, with, again, everything just being a paper push. Over onto the Dow Jones, nice move down below 470. Okay, that's enough. Stay above the 20-day moving average. Let's move forward. Over here on the IWM, nice visit down to 240. Okay, that's it. That's enough. Let's just use that 50-day moving average as a litmus and hang on to it so we can get back up off of this 240. So as you see, it's not really rocket science. It's not. So I bring you over here to the futures to leave you off here. Futures, Dow Jones, 4-hour. Looking at this and looking strictly at the RSI and pipping. Hello, oversold. Very similar to how you were oversold back here in the middle of October, and as well as you were here over in the OPEX Friday, October, before the massive ramp up of virtually 3,000 points. Come over onto your Russell 2000, and your Russell 2000 once again hanging on to that same lows for the better part of a month. Same lows, 2420. And here you have a fractional wannabe buy divergence over on your 4-hour on the Russell 2000. Over here on the ES, again, this is a little bit of a too wide of a view for most people because you can't day trade this. But you come back and bring it on to your 4-hour to get a bigger, broader, wider view of where you're at. And as you can see, having gotten oversold on that visit down to the 50-day moving average back in the early part of October, you have yourself a buy divergence over here on your 4-hour on the ES. Come down over on to getting into where is this cat? I'm going to smack the shit out of this cat. Come on over here onto your NQ. And again, NQ having almost taken itself down into that prior resistance area, and your big buy signal over here on your 4 hours. So again, try not to be over bearish and expect that you're going to get something which is going to push you back up into the upside, because at the end of the day, whether you like it or you don't like it, all gaps get filled. All of them. And this one sits here at above 68.20, right on up there to around 68.52. So all gaps get filled. Like it or you don't.